Hey everybody, welcome to the Thursday evening financial thing live stream. Hope you're doing well. My name, of course, is Lawrence. I don't say that anymore because I figured everybody knew that, but there are some people who don't. Hope you are having a wonderful week. We are going to talk about a lot of different things today. I've decided the stream must become more lighthearted, more fun. Not only are we going to talk about peer-to-peer lending ditties, is that right? Ditties? Maybe I shouldn't say his name at the moment, but we're going to talk about peer-to-peer lending things. We're going to talk about the stock market and how absolutely disgustingly absurd it is right now. We're going to take a look at an interesting post on the peer-to-peer independent forum, which I do lurk there on occasion. And we'll, of course, take a look at the Trading 212 portfolio. We'll take a look at Bitcoin. And we're going to take a look at some other fun, exciting things that exist on the crazy place that we call the internet. But everybody, thank you for tuning in. I do appreciate each and every one of you. And to all the loyal Patreon subscribers, much respect. Some of you have been with me for years, and I do really appreciate the support. No matter how small or big it is, thank you so much. Quick word to our sponsor today, of course, Cufflink with a new updated graphic. And up to 10.25%. I said yes, 10.25% gross amount of interest per annum. Over £330 million of invested something. Cash, that's supposed to be. That's a typo on my end. It's supposed to say over £330 million invested since 2016. And zero investor losses to date. Remember, please, that your capital is at risk. Don't invest unless you're prepared to lose money. Please check the rates on Cufflink's website, as rates do fluctuate and change. You can sign up at the link in the description below, or go to join.cufflink.com/financial-thing. Thank you to Cufflink for supporting the stream and also for supporting the Holly Cam. Today she has been on a long walk in this excessive Florida heat, by the way, and today in Orlando is 36 degrees Celsius, which is getting close to 100 degrees Fahrenheit, very warm, a little bit too warm. I think I'd rather be in the UK at the moment, but alas, cannot be there right now. So again, thank you to Cufflink. Say a quick hello to everybody on the stream. If you can please subscribe to the channel if you haven't. Hit that thumbs up. It helps. I have a little bit of a cough today. I don't know what's going on, so excuse me. I tried to drink a little bit. Paul Bagworth, of course, in Kenilworth. A lovely sunny evening. Lionfish hunting. Hello from Seattle. We've left the Caymans after 17 years. Weather is 64 degrees Fahrenheit, much more like the UK. We're on the way to Thailand. Congratulations. Are you moving back to the UK lionfish hunting, or are you moving somewhere else? Peter Vince is here, of course, in Leatherhead, where it's very mild but dry. Mike Powell, of course, in sunny Southampton, home of the Southampton Mall that I used to shop at when I was a kid. Stephen Hailing in Nottingham. Colin Perry in the Peak District. What a beautiful place to be. Chimpo Naughty. Darren in Cambridge, home of the infamous Cambridge University, where I'm sure they are having protests like at every university. Maybe, I don't know. Don't get me started on that. Dave Dawson. Hi from a holiday lodge, watching a wonderful sunny sky. Where is the holiday lodge? What is that? Annabelle Nyron, of course, is here from Amuggy, Spain. By the way, a couple of Spanish restaurants hit the top 10 best restaurants in the world today, so congrats to Spain. John Day is in Nottingham, and Alan Stratford in Worcestershire, as they say in America, Worcestershire. Thank you to everybody who is joining this evening. Let's get right into it. Interesting things that I've found browsing the old interwebs today. We have a prop lend update. It talks about the election fever that is happening in the UK. So, of course, UK having a general election this year, as is the US. So, kind of big things going on. And the US is a mess. I don't know what is going to happen with their election. Not a very good choice of candidates for the Americans, but I digress. The UK is one of the 40 countries that are likely to have an election in 2024. Analysis from Savills suggests that historically, transactional activity is generally lower than normal in the 3 months prior to the election date, and then recovers in the following 6 month period. So they're talking about how the UK election is going to impact commercial properties in the UK. Given that there is just over 6 weeks from the announcement to election date, the market is still holding out for the smallest of rate cuts at the next MPC meeting. The second half of 2024 could prove exciting for the commercial property. Of course, we are absolutely going to see rate cuts. If I had a bet on it, I would 100% bet on it. We'll talk about that today too. So what do we do? What do we know from the two main runners? Blah, blah, blah. We talk about the Conservative Party. I have to be honest, I'm not really that interested in politics. I find politicians to be a little bit of a bore and untruthful, some of those individuals. But it does look like the Conservative Party is trying to put money maybe into some building projects. And they did cancel the future phases of the massive HS2 transport project, allocating $36 billion to be spent on a new network north of infrastructure improvements. So that, I think, was welcome news. Whether they do that or not is another discussion. They're trying to go back to this whole net zero thing, blah, blah, blah. So if you're interested in reading some political views, the PropLend newsletter is good for some of that. But what I'm more interested in looking at is their loan book update. Total amount of active loans, 80. One loan repaid in May. They've got one loan being paid from the interest reserve. 2 loans past term. So I would say good results still going on there with PropLend. The UK has recorded the highest 21-day commercial property rent collection rates since the start of the pandemic. That's good news. 94.8% of rents due on commercial properties have been collected by property agents, managers, landlords, and investors. So maybe that's showing positive economic news. The commercial rents are being paid on time. So I would say that was good. So keep going to PropLend. A little bit of housekeeping. Lendy. Lendy's got a new address if anybody cares. A new address is in Whiteley, the Solent Business Park. So it says if you send anything in the mail or in the post to Lendy's old address, it will not any longer be forwarded, and any item sent will be destroyed. So if you want to send a letter of complaint or send a photo or whatever, you want to send them some sweets, send it to that new address, to the Lendy Limited Administration. Interesting article on the alternative credit investors. The risks and rewards of peer-to-peer lending in 2024. Peer-to-peer investing, listen to this, will celebrate its 20-year anniversary next year, so 2025. That means in 2005, officially, Zopa was launched, which then created a waterfall effect when other peer-to-peer lending companies were launched. So let's have a look at what the alternative credit investor says are some of the high upsides of peer-to-peer lending. Number one, high returns or higher returns. We are still living in a high rate environment. At the time of writing, the US base rate remained at 5.25%, 16-year high. These rates have translated into higher returns for peer-to-peer lending investors at folk to folk For example, returns start from 8.75, an increase from 6.5% previously. Then on the risk side, we have possible rise in defaults, which we have definitely seen in a lot of these peer-to-peer lending companies. Comes with an economic dent and what's going on with the so-called recession in the UK, and also the nature of property development bridging. These rate rises also apply to borrowers, which means that builders and developers are paying more money to borrow money, which also puts a dent in their profits in their pocketbook. So that is one of the risks, is the rise in defaults. Reward more lending opportunities. Banks have been pulling back from the lending market in recent years. They're trying to de-risk, which has created a funding gap for many business borrowers and property developers. Definitely, certainly in the smaller developer gap section. So the peer-to-peer lending investment companies have filled that gap, which has meant more lending opportunities for people like you and I. Enhanced regulation. Of course, we have the FCA coming in and putting in more regulation when it comes to peer-to-peer lending investors, and we have to fill out now appropriate tests. And honestly, some of those appropriate tests are kind of a little bit of a joke. It's not really anything other than clicking on a couple of buttons. Other companies have a more difficult appropriate test that one has to go through, but that is as a result of FCA regulations. Of course, you can no longer get interesting offers like cash back from peer-to-peer lending companies because the FCA has said, no, we put you in the same bucket risk as cryptocurrency, so we're not going to let you get any incentive for trying out. And then finally, reward. You are supporting British businesses. This is a difficult time for the UK economies. Many British businesses are struggling to access finance that they need to grow and innovate. Over the past few years, peer-to-peer lending lenders have been extremely supportive of these businesses, offering finance to business owners who have otherwise struggled to find funding. So that is one good thing. This just kind of looks like more of a promotion for folk to folk, but it's a good basic article, I think. Some of the risks and rewards that still exist in peer-to-peer lending. Easy Money has posted, look at this, a 46% rise in profits. Wow. They have reported an 86% year-on-year rise in pre-tax profits to £2,097,000. Despite a challenging year for the property sector, the firm also reported an 18% year-on-year increase in revenue to $6 million. So you can do some math, some basic math, and see that they are making about 35% pre-tax profit on their revenue. So that is pretty good. That's more than Toyota, which I think makes about 10%. Bit of a different industry, of course. The results come as Easy Money, which has lent more than $375 million to date, expects to exceed the $400 million milestone by the end of 2024. Jason Ferrando, who I've reached out multiple times to have him as a guest on the stream, but my messages go unanswered. Jason, if you're listening, come on the stream. Tell us about Easy Money. We all want to know. We want to hear from you. But he says, although 2023 was challenging for the property sector, we are delighted that our team managed to significantly exceed 300 million quid in loans written. To be able to achieve so much in a challenging economic environment is a testament to our team as we now begin to break records in 2024. Easy Money not only provides competitive funding to property professionals across the UK, but it also offers attractive returns to platform investors. Now, I myself do not invest through Easy Money, but I took a look at the rates. I wanted to see what they're offering nowadays. 5.3% target rate per annum on what I would consider as the short term. I don't want to use easy access because it's not. There's no guarantee with it, but 5.3% is not 5.53%, sorry, is not too bad. You got to put in £100 minimum. If you want to get an extra 1%, you've got to pony up 20 £100,000. And then high net worth, 100 grand plus 7.51%. And professional, $1 million. So if you put in $1 million, you can get up to 10%. Personally, I don't really think the risk between the premium plus is that bad, but I also don't like having to put in that bigger amount of money into one platform myself. I'm not a high net worth individual. But I think the 5.53% is probably where I would personally be. But for some of you high rollers out there, I know that they're out there. You guys will probably be comfortable with these higher rates of 20%. Sorry, £20,000 at 6.52%. But those rates are certainly decent. Peer-to-peer lending in 2024, LoanPad put out a blog post about how peer-to-peer lending is doing in 2024. I really like to see their take. They do. If you haven't checked out their blog on their website, it really is interesting. But they are saying, so what does the peer-to-peer lending space look like in 2024? Better regulation. So I kind of always get on the case of the FCA about their regulation, and sometimes I don't necessarily think they're always doing the right thing. But in that respect, there is better regulation now, which has cleaned out some of those muddy and murky peer-to-peer lending companies that used to exist and took our money with them when they went down. But 20 years after its arrival, peer-to-peer lending is well established in the financial services landscape. It's regulated by the FCA, aka the Financial Conduct Authority, and all peer-to-peer platforms must adhere with a strict set of standards and rules in order to be allowed to operate. These rules include the requirement for a wind-down plan, which lays out how investor money would be protected in the event of a platform cease of operations, investor education. No, we got the appropriate tests that we talked about before. Also in 2024, we see larger loan books. A number of platforms have now crossed the £250 million lending mark, including LoanPad. As of May 2024, LoanPad had total live loans worth in excess of £90 million. Last year, it is estimated that the global peer-to-peer lending marketplace was worth about £88 billion, or 133 billion US dollars, and it's growing year on year. Of course, you got the tax-free investment wrapper, which has been much improved now with the IFISA, that you can open multiple of those in one given year. Bridging the funding gap, of course, it talks about the same thing that the other article talked about, how excuse me, I have to sneeze. Oh dear. Allergies. Of course, peer-to-peer lending, bridging the gap now of the loans that high street banks don't want to take. We also have new risks of economic uncertainty that has persisted for several years in the UK. At the start of 2024, the country was in a state of recession and interest rates were stubbornly high, which has presented a few new risks in the peer-to-peer lending space. The main risk in peer-to-peer lending is the risk of a default, of course, if borrower is unable to meet their payment terms. Of course, when interest rates go higher, there is a risk of a borrower defaulting, not being able to make those higher payments, which could translate into a loss for investors. Of course, at the bottom you can see here the disclaimer: don't invest money unless you're prepared to lose. And the way LoanPad combats that risk is to have much lower loan to values on its loans, 50% max right now, average of about 41%, which sort of really brings that risk of default down a lot. But anything is possible. You just have to keep an eye out for the defaults. But if you're looking at companies that have loans with 75% or even 80% loan to value, just remember you're taking a lot more risk on loans like that. A bit of side peer-to-peer lending news. Is not really peer-to-peer, I know, but it's kind of in our wheelhouse, and I know some of you invest in Lending Invest loans. They have secured £42.5 million of funding facility with an alternative investment manager. So I guess you would call that private credit, which is, I an unnamed alternative investment manager. So sometimes now these companies are going to private offices to get money. Lendinvest, I mean, for them, 42.5 million is not actually that much money. They've got, I think, over £1 billion of loans, so talking what, 4.2%. Small, but it's good that they're still looking for different access ways to get cash. Narinder here put out an article with Alternative Credit Investor about how he believes more work needs to be done on IFISA, so ISA, independent ISA reform. He talks about that it's good to see that the ISA has been extended and investors get more of a tax-efficient wrapper to put into their savings. We think there is more that needs to be done in the alternative space to encourage investment. He's basically saying that there's just not enough education out there. Most people still don't use the IFISA unless it's for stocks and shares. The world of peer-to-peer lending is relatively unknown to your average high street punter, and I think that's something that Narinder is definitely wants to see change. Cufflink's ISA has evolved over the years as regulation and legislation has changed, but the security element has remained the same. The only thing that's changed is the number of years people can lock their money away for. So you can now do the auto investments from 2, 3, and 5 years in the IFISA wrapper. So interesting. There needs to be more IFISA education and awareness from the nationals. He said the nationals. Interesting. People default mode is to use a tier 1 or tier 2 bank but get low returns. Most people are reluctant to go outside these banks due to the lack of knowledge and awareness. Let's see how much you can get now for an IFISA. Let's see what the rates are. We are seeing some unusual requests coming from you. Yeah, I know. Account type. Show me the account types. ISAs. Let's have a look. See what the rate. I don't need to know what an ISA is. I need to know the rates. Show me the rates. There we go. Let's see what we can get. Chip Cash ISA, 5.1%. Paragon, 1 year. Fixed rate, 4.8, 4.7, 4.6. So, I mean, not terrible. Wouldn't be bad probably to lock in these rates if you believe that interest rates are going to be cut. But there's definitely better alternatives, I think. And this is what Narinder is saying. Or maybe not better, but just different alternatives that a lot of people just really don't know about. Narinder also says our rates are obviously dependent on the Bank of England's Monetary Policy Committee decisions and market conditions, but there's also an element of what our competitors are doing. We're never going to be the lender that charges the highest rate to borrowers or offers the highest return to investors, but we have a good track record with people providing very good feedback on Trustpilot, and we listen to feedback from all our investors. Cufflink, remember, if you don't have an account, go check them out. So, good article there. Our good friend, Mr. Wiseclerk, puts out the peer-to-peer lending origin every month. This is the companies that he has access to data, and it shows you the Crowd Property put out, and this is he does it in euros, minus 21% from, so that would be in the previous month in May, so April, and 67% less loans than at the same time last year. If you want to see this link, this chart too, by the way, he puts it out every month, you can go to P2, the number P-banking.com. It really kind of shows you a lot about the European markets too and what they're doing versus more, not so much of the UK, but he does have folk to folk on here with no data. Cufflink, no data. Let's see. Propland, 285% more loans than last month, minus 6% from last year. Who had the biggest increase from last year? Let's have a look. Debentum. Debitum Investments. I don't know what country that is. Maybe somebody else knows. 144% more loans than last year, but relatively not a huge volume, 4 million euros. Esketit, 28 million, up 21%. So you can see the volume is good. I mean, look at Mintos, 107 million euros of loans, up 16% from last year. That's a big volume. And then Peerberry down 22% from last year. So really mixed bag of numbers is just changing between the different companies. But again, go check out P2P-banking.com. It's really good data, so you can see what the loan originations. Oh, and speaking about LoanPad, on that blog, it had a bit of a nostalgic read of this press release that they put out on January 30th of 2019, the year and the month when they actually released their platform. And I remember the date and this actually happened because I had been meeting with Louis from LoanPad prior to his launching, and he was kind of telling me about what they were planning on to doing, and it was good to see the date that it actually launched. So if you go to LoanPad's blog, you can actually see this article where they released on the 30th of January when they put out their platform and released it to investors. That's pretty good. I'm always up for a bit of nostalgia. Let's go to the peer-to-peer independent forum. This is something that I'm always interested to see. The general discussion was, which platform do you actively invest with? And some of you in the stream are probably some of these posters here. But it's really cool to see who is investing in what. So we got kind of the general names that we talk about here. Propland. This guy says, I don't want to overdo. This is Scooter. Hello, Scooter. Crowd Property. I turned off auto invest yesterday. I've tried Unbolted, but was underwhelmed. Why? I would ask why. LoanPad, I felt the option that for them to decide they don't want to play anymore is not a risk I wanted to take. I mean, what does that mean? They don't want to play anymore. What, they just decide they don't want to do peer-to-peer lending anymore? Isn't that every platform? Let's see here. We got Capital Rise, Wise Alpha, Capital Stackers, Quadus, Somo, Easy Money, Quanloop, running down everything else. Birdie says, LoanPad, my favorite. Elfin Market, slowly increasing. Cufflink, Contented, not putting any new money in. And Quadus. And then this guy kind of reminds me of me, Fire Dog. He's got Assets Exchange, Axia Funder, Capital Rise, Capital Stackers, Crowd Property, Landlord Invest, LoanPad, Cufflink, Quadus, Propland, Unbolted. So everybody seems to have a different mix of the peer-to-peer lending platforms that they still continue to invest through. We got Steerpike down here, long-standing member of the community at LoanPad, Folk to Folk. So all the local players, and then Jono, the last poster, he's doing LoanPad reinvesting interest, Crown Property winding down, Cufflink considering winding down, and Bolted reinvesting interest, Elephant small increase. So interesting mix. Let's talk about interest rates. We saw a interest rate cut today from the ECB, the European Central Bank. So the first interest rate cut in a very, very long time. And like I said before, I did consider if interest rates were going to be cut, they would be relatively small ones. I think this is a token rate cut. I don't think with inflation issues that still continue to exist that these rate cuts can really be that severe, but they have cut deposit rates down to 3.75% from 4%. So you're going to see now what's going to happen is if these rates do continue to go downwards, people that have been sitting on savings money in savings accounts because they're getting pretty attractive rates are going to have to rethink their strategy when it comes to what to do with cash that they're sitting on. Especially if those rates start to come down towards the 3.25 or even 3% range, which I don't think is going to happen for a while. But what I think happens then at that point is people are going to have been so used to getting this higher yield, they're then going to take that money and they are going to increase their risk tolerance and put that into places like peer-to-peer lending, businesses, and the stock market. Probably not bonds, although bond prices do tend to go up as interest rates decrease. So they might try to go to the bond route. I don't think so, personally. I think it's going to go into the stock market and possibly some cryptocurrency. We'll see what happens. But also, same day, I saw something very interesting, which was not as public news. Let me show you this. Oh yeah, this is the ECB. They also cut main refinancing rates by 25 basis points to 4.25%. So that was 4.5% for refinancing rates. So deposit rates now 3.75%. And what else? Here we go. This is what was not very publicly shown, but on June 5th, the Bank of Canada also reduced its target rate of overnight rates to 4.75%, with the bank rate of 5% and the deposit rate of 4.75%. So you are starting to see these global rate cuts. Be really interesting to see what happens with the next Bank of England, also the U.S. interest rates, whether the next cut is a very, very small cut. I don't know. The stock market seems to think that's going to happen, but we shall see. LoanPad, they put out a great article about compounding interest being the eighth wonder of the world. I love these generic articles. To a very seasoned saver or investor, they're going to look at this and think, oh, this is obviously basic information. But this is the type of thing that people do need to become educated about, because believe it or not, there are a lot of financially uneducated people out there who don't know what compound interest is. But yes, it is the eighth wonder of the world. Compound interest means that after you make your initial investment, you commit to reinvesting any interest earned year after year. If you haven't invested in a fixed rate product or an investment portfolio which pays even a small amount of interest each year, these compounded returns can quickly add up. I love this calculator. This is at thecalculatorsite.com. It's my favorite compound interest calculator, which really shows you if you put £1 in at 4% for 15 years, at the end of that 15 years at 4%, you're going to have, this is of course pre-tax, £1.82. So you're going to make about 82% return after 15 years. So you can make some really good money by just, even at low interest rates, just leaving your investments rolling over and your interest rate rolling over. If we look at 5,000, that would turn into £9,101. So the problem, though, is this 4% is not really beating inflation and beating the higher costs of goods and services. So even though this looks like a pretty tasty number, if your costs of goods and services are going up at the same rate, you're basically at break even. And also remember, you have to pay tax. If you're not in a tax wrapper or an ISA, you have to pay tax on that increase of £4,000. So you're actually losing out to inflation, which is why you really have to put a portion of any cash that you have sitting around into something that can get you more than what the rate of inflation is, because of the taxation. And by the way, tax is very expensive in England and in the UK, so you are going to pay some pretty nasty tax rates, especially if you're in a higher earning bracket on your income. I think the best thing to do is try to look for something that pays around 6 to 7%. You're looking at a much better rate of return, 145% after 15 years. And if you can bump it up to 8 or 9%, which is the S&P 500 average, now you're looking at 16,000, so a 230% return. But always remember about compound interest, how good that is. What's next? Let's see what I have here. Let's delete that. Oh, this is an interesting piece of news today. For anybody that follows what has been going on with GameStop. The guy that put this big bet out on GameStop in 2021 and made a ton of money and really pumped the stock value has come back again. After a 3-year hiatus and quiet, he has revealed now he has a $175 million bet on GameStop. It actually is much higher now because the stock has gone a little bit parabolic since this got released. This was on June 3rd. You can see actually, look at the GameStop stock price today. It's up 34%, which is nuts. That's one day. Very, very dangerous, by the way. Don't play in these waters. But you can see his position here. It is absolutely nuts. This was put out on June 3rd, so 3 days ago. $289 million position now through the use of options. June 21st option that he put, obviously took out before he released this post, but he's made a huge profit of over 120 million US dollars. It's probably even higher now because that stock is absolutely ballooned. But with all good things comes bad things, and now his roaring kitty, his name is Keith Gill. He is now being touted as being banned from his brokerage, E-Trade. They want to possibly ban him from having an account on their platform because Wall Street doesn't like him because he's upsetting everybody. And E-Trade has put out some information saying, well, we may ban his account. So there you go. That's nice, isn't it? Look at the stock price today. $42. It went up 36% in one day. Very, very dangerous to be involved in this type of, it is basically gambling. You can see here on May 14th, this price was up to 48 US dollars and then crashed down to 18. 9 days later, it was gone, and then it's taken this big, huge spike back up again. So dangerous gambling. This is the craziness of the stock market. You can win a fortune and lose a fortune, so be very careful. Talk a little bit about cryptocurrency. Congress had passed this piece of legislation on May 9th of 2024, which allowed highly regulated financial companies to self-custody cryptocurrency. So what the SEC basically has said, this was not possible. We don't want financial companies self-custodying their own Bitcoin or other cryptocurrencies. Congress said, no, you can't do that. If they want to self-custody their own Bitcoin, let them be able to do it. So, for example, BlackRock has an ETF with billions of dollars of cryptocurrency of Bitcoin that they have to purchase, and right now hold it themselves if they want. So they passed a resolution to overturn the SEC's rule against that on May 9th, and then Mr. President Biden came out and said, I'm vetoing this resolution now, which goes back to supporting the SEC. They say, Mr. Biden says that it will promote the responsible development of digital assets and payment innovation in the United States and the global financial system. So they said, no, we're not going to allow companies to self-custody their own cryptocurrency. You must, you can only do it through the companies that we say it's okay to do it through. I mean, that's pretty much financial tyranny in some cases. The reason I tell you this, because you know in the Trading 212 portfolio, which we're going to take a look at now, I hold Coinbase stock. So let's take a look and see how the portfolio is doing. Well, we've had a successful week, up to 21,719 pounds, pushed by Coinbase, which is trading very, very high. It was 260 US dollars today. So in the last month, we've gone up 14% for a 63% profit. Also pushed by Nvidia, which is insane what is going on in the last month, 30% 8% returns. And then Valco Energy still putting along. It's not been really wonderful last month, 5.21%. And then Creative Realities today gave me a bit of a kick in the ghoulies, because as I am a person that tries to sometimes think about things, I decided to sell half of this position. But of course, when did I sell it? I sold it this morning, I think this morning, for $3.50. I put in a limit position, and then the stock decided to say F you to me and then ballooned 16% today. But you know what? It's okay. It's never wrong to look at things and say, is this the best option? So what I did, my idea of thinking was, this stock is so volatile. You can see the spikes up and down. Here, I thought I'm going to actually try to trade this stock a little bit more actively. So I put in a buy order down here. You can see for $3.15, because I do believe this thing is going to come back down again. And if it does, I'll come in and rebuy in that position, and haven't really lost anything on the downside. We did lose some upside, of course, today, but you know, that is what it is. And also the Coinbase play, which goes into this whole Biden and the US decision to prevent other companies from custodying. Well, of course, Coinbase is going to be the main recipient of this good news, because a lot of the ETFs that hold Bitcoin now in the United States are using Coinbase as a custodian, and they have to pay them fees to do that. Now Coinbase is probably loving the fact that Biden has vetoed this resolution of the US Congress, and now these Coinbase shares are going to continue, I think, to go higher, because Coinbase is going to continue to make really, really big revenues off of these ETFs using Coinbase's self-custody. This was a very simple play to me. I am not a sophisticated stock trader, but back when I purchased these Coinbase shares several months ago, and this was before the ETFs were, actually they were just starting to get going, and it made a lot of sense to me that I think 8 out of the 10 biggest ETFs were going to use Coinbase as a custodian, and Coinbase was not really making a lot of money on its corporate side. Most of their profits were coming from retail, and it just made sense to me that if BlackRock uses Coinbase to custody all its billions of dollars of Bitcoin, then obviously Coinbase was going to do well, and they were going to make more profit, and the stock price was going to go up. So that was my thinking. There was no technical analysis. I didn't look at balance sheets, blah, blah, blah. I just used a bit of common sense, and whether it'll work out in the long run, who knows? But right now it's working out. And that's good for charity, because that means we can send more money to charity from the profits. Let's look at Bitcoin, our friend. It's now sitting at $70,886 US dollars, with a market cap now 1.4 trillion US dollars. That's pretty big. It did go over 71,000 today. This thing does not seem to be, oh look at that, 71,500. And then we've had a bit of a pullback, but this thing doesn't show any signs of slowing down. I say as interest rates do start to come down, I think you see more and more money being piled into these alternative asset classes. This is just plain stupidness, but I had to show you this on Rich Dad Poor Dad. Mr. Robert Kiyosaki says that Bitcoin, he's making a prediction that will reach 350,000 US dollars by August 2024. What's your take on this? My take on it is that's ridiculous. That's not happening. I could see if maybe President Trump ends up being the president again, maybe it balloons to 120, 130, 140 this year, but 350 is ridiculous. This guy has a history of making bad predictions, but I thought it was funny. I want to show you this video. This is Larry Fink. He's the head of BlackRock. He's the CEO. This is a very, very powerful man in the financial industry. So BlackRock and Citadel are going to launch a new national stock exchange in Texas to compete with the New York Stock Exchange. I think they're going to have a lot of trouble pulling that one off. You know, the NASDAQ and the New York Stock Exchange are pretty much monopolies, but we'll see what happens. But what I do love about Larry, he is very pro blockchain, which is the technology cryptocurrency is built on. And for everybody who focuses on Bitcoin being a scam or a Ponzi scheme, blah, 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 you know, it's a money laundering facility. Yeah, I get it. Not always true, but some of it is true, of course. What I do love is the crypto technology that blockchain focuses on. And Larry kind of he understands it. I want to play this for you real quick because I think it's very interesting. I think you'll be able to hear this. Check this out.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities about bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own share.
I mean, that just makes perfect sense to me. The technology, and this is what I think a lot of people are missing, is technology is the way of the future. And blockchain technology is going to be used in the future to do things like exactly what Mr. Larry Fink is talking. I wanted to call him Larry Flint. Larry Fink, he's talking about, you know, when you buy a stock, you own it, right? That at that moment, technically, but realistically, on the back end, these companies have to go and make that transaction to consolidate, and that has to be put through a process of transactional facility, and it does cost money every time BlackRock, every time, say, I buy a share in a BlackRock product, they have to go at the end of the day and consolidate that and make a transaction with another company. And it costs a lot of money, but blockchain technology would cut all of that out and make things instantaneous. So this guy really gets it, and he talks about the tokenization of everything. So imagine if you had a share in Apple. Now it would be a token share existing on the blockchain. So this is all being laid out in front of our very eyes. It's just a lot of people still don't understand the technology, but believe me, it is going to come. And you always got to keep an eye out on the future, because future is important. This is an interesting study that a behavioral scientist from the University of Toronto did, and it's basically a peer study review on what type of people are adopting Bitcoin, and this is what they found. They surveyed thousands of Canadians. I don't know if you can see that. I hope you can. Basically, it said, our data drawn from a sample of Canadian retail investors suggests that Bitcoiners are ones that tend to be intellectually curious and emotionally stable, 2, value personal growth, relationships, community, and health over material possessions, and having a high status image. And they scored significantly higher in financial literacy than the general population. I love that last point, number 3, because this is the thing that I've always been troubled by in the UK and the US and through global places in the world, that most people are just not financially literate. It's the reason that I do these streams, to help people really become educated on things that they don't necessarily understand. But Bitcoin holders are significantly higher in financial literacy than the general population. there's an interesting study. You can go to osf.io/YNTDU if you want to read that. So it's the OSF registries. If you Google that, it's a Bitcoin report. Very, very interesting. This is the Bitcoin price chart. I love this little graph. It's so amazing. It's the rainbow price chart. All we can do is look at historic data. That's all we have when it comes to looking even at stocks and shares. And the FTSE 100 or the Dow Jones, we look at historical. And this rainbow chart tracks the price of Bitcoin from all the way back to 2013 and how it has seen these price rises, these dips and valleys throughout the years and now and trying to predict the future price. But you can see here, this is where we are right now. We are still considered in the accumulate, not quite in the buyer basically fire sell sections, which were down here in 2022, but still here. And if we follow this graph through, and this very, very simple chart proves to be at least somewhat accurate, you can see this price trajectory just continuing to rise up. And look at this number over here on the left. You got the $1 million point, which could be sometime in 2028. I think it might take a little bit longer than that, but judging by this historical numbers that we see, and these are the halvings, so we had a halving this year, the halving in 2028, you could be looking right around here. Even if you're in this green section, you'd be over you'd be over 200,000, 250,000 there at that point. So that line right there is the 250,000 point, which is very, very easily achievable. If you haven't seen this video today, I think this is one of the most impressive pieces of video that I've seen when it comes to space travel. I had to show you this because I just loved it. Hopefully you've seen it. If not, this was the Starship SpaceX that took off and then landed. But some of the video that they have from this thing is just so terrific. I mean, it looks like something out of a movie with computer-generated graphics. So they sent this rocket up actually from Cape Canaveral. I could see it out of my window go up. It's about 70 miles away. And the thing landed back down on the test raft that they had out in the ocean. Yes, look at this thing go. So it was pretty cool that they're able to do that, because this is going to be a manned spacecraft that maybe one day will take people to different planets, who knows. But I just love that. The shot right here, where it went up. Goodness. That might be the coolest piece of video I think I've ever seen of a spacecraft going. I mean, they get so close to it. How they do that? First I thought it was some kind of a CGI video, but no. Simple things bring simple pleasures in life. Couple more things for you. Okay, everybody. Close your eyes and then barely open them and tell me what you see. Just squint. Is that not one of the coolest things? I think it might have been maybe what's that guy's name from the rock band? Other people say it's Jesus. I don't know. Maybe it's that, what's his name? Jim, I can't remember. The guy from the rock band. I love that. Yeah, so that's it. It was a little bit different today. I said I wanted to make the stream a little bit lighter. So one things that I find on the interwebs that I find interesting, I'm gonna put them out there for you. But if you enjoyed the stream today, hit that thumbs up. Even if you didn't enjoy it, hit that thumbs up. I'll take a quick look at your comments, and then we are going to get out of here. Alan Straff. Ooh. Mike says the Southampton Mall may not be there anymore. Oh dear, that's sad. Dave Dawson's been putting more cash into Cufflink. Lower LTV, Stephen Hale say, look worth more investing in. Dave Dawson is in a holiday lodge in Derbyshire. Very nice. Cufflink seems good at dealing with problem loans. I'm generally picking A2 and A3 rated. I prefer self-select. Agreed. John Day, I'm trying to reduce peer time. So he's talking about manual investing products and doing more auto loans. Yeah, that's actually something I've done myself too. Regulation was never the entire issue. Enforcement was, and I'm not convinced that that has improved massively. Paul Bagworth's been investing with easy money for a few years. So far, so good. Very cool. Good liquidity of easy money. I have thought about trying them out. That flag I couldn't identify was Estonia. Very good, Mike. Very good. Had a quick look at Media X-Gen AI as used by Robert Preston. Seems to be a crypto AI toolset with auto option via brokers. None in the UK. Anybody tried it? Lawrence? No, I haven't. Roaring Kitty being investigated by regulatories for possible market manipulation. Yeah, of course he is. Imagine if you own $200 million of stock and you manipulate the market by putting out a post that says, I have these positions, you might want to follow me. I'm sure. Wall Street hates him, and of course Wall Street is a evil empire. You have to understand something. Imagine this, right? The government of the UK prevents you, people in the UK, from investing in certain products that Wall Street offers. This is done by design. You're not able to, for instance, to buy the BlackRock ETF, right? Think about that, the Bitcoin ETF. You cannot buy it in the UK. Why is that? You can't go to Hargreaves Lansdown, I believe, and buy it. That is by design. But of course, if you want to buy Apple stock, you're absolutely free to do so. So Wall Street will always investigate and try to shut down anybody that is going against their principles and they're swimming against the current. No one can predict Bitcoin's price movements. That is absolutely correct. Nor can you predict any stock's price movement either. But you can look at history. Rich Dad Poor Dad is the king of clickbait. I once watched one of his videos. Never again. Such a star. Yeah, that's pretty cool. Yeah, the SpaceX. I have some money. Dave says I have some money in SpaceX via my shareholdings. How fantastic is the spaceship? I tell you, being able to watch it go up is something. If you've ever been to a shuttle launch, you probably can attest to this, but I've seen countless ones. I can literally stand outside in the back of this house and watch it go up, and it just, especially at nighttime, is absolutely incredible. couple of days ago, they put out 2 in one day. Well, they were supposed to send up the Boeing Starship one day, the Starliner, and it didn't go up, but they had launched a SpaceX project a several hours before in the morning. But just to watch them go up, if you ever get a chance to see one in person and get close, they're absolutely incredible. Bitcoin still hasn't lived through a 2008 crisis. Yeah, I lived through the 2020 crisis. So, will it tank like everything else or go to the moon? Who knows? Yes, Jim Morrison. Thank you, Candace Norcesian. That was who I was thinking it looked like. Absolutely. Anyway, listen. Thank you again to Cufflink. Thank you to the official hound of the Financial Thing Livestream. I appreciate every single one of you for being here. I'll be back next Thursday at the same time, 7:30 p.m. UK time, all being well. Thanks so much for tuning in. I hope you have a wonderful weekend. That's all I got for you. I will see you next time. Blessings to you all. Take care. Bye.